The U.S. economy added a robust 272,000 jobs in May, signaling continued strength in the labor market despite concerns about inflation and potential interest rate hikes. The unemployment rate, however, ticked up slightly to 4%, ending a 27-month streak of unemployment below that level. This mixed report presents a complex picture for the Federal Reserve as it weighs its next moves on monetary policy. Job gains were widespread across several sectors, led by leisure and hospitality, which added a significant number of positions. Healthcare and professional and technical services also saw substantial increases, reflecting ongoing demand in these fields. Government employment continued its steady rise, contributing to the overall positive numbers. Despite the strong job creation, wage growth remained moderate. Average hourly earnings increased by 0.3% for the month and 4.1% over the past year. While this pace is still above pre-pandemic levels, it suggests that wage pressures may be easing slightly, which could offer some comfort to the Federal Reserve in its fight against inflation. The increase in the unemployment rate, albeit small, could indicate a cooling in certain segments of the labor market. This rise may be attributed to more people entering the labor force seeking employment, but not all immediately finding jobs. It's a nuanced situation that requires further observation in the coming months. Economists are divided on how the Federal Reserve will interpret this latest data. The strong job growth could reinforce the Fed's cautious approach to cutting interest rates, as it suggests the economy is still resilient. However, the slightly higher unemployment rate and moderating wage growth might provide some justification for a more dovish stance. The Fed has been closely monitoring economic indicators, particularly inflation, which remains above its 2% target. The central bank has held its benchmark interest rate steady in recent months, aiming to balance the risks of stifling economic growth with the need to curb inflation. Looking ahead, the labor market is expected to remain a key factor in determining the trajectory of the economy. While the May report suggests continued strength, it also highlights some potential vulnerabilities. Further data on inflation, consumer spending, and business investment will be crucial in shaping the Federal Reserve's policy decisions in the months ahead. The central bank's next meeting is eagerly awaited by investors and economists alike, all looking for clues about the future direction of interest rates and the overall health of the U.S. economy. Stay tuned as we continue to track how these economic shifts will impact your wallet.